Good morning, everybody. It's Monday, June 24th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1.25 at 452. November soybeans up 3.5 at 1123.5. December Chicago wheat up 2 at 601 3/4. December Kansas City wheat up 3/4 cent at 604. December spring wheat up 2.25 at 639. Let's start off with the flooding.
So, heavy weekend rainfall caused flooding in parts of South Dakota, Iowa, and Minnesota. Over the last week, a widespread band in the region saw 4 to 10 inches of rainfall. Some localized totals were likely higher. In one city, Minnesota declared a peacetime emergency and activated the National Guard to help fight floodwaters. Flooding in northwest Iowa led to 250 water rescues and a massive amount of property damage. Flooding along the Missouri River and its tributaries is likely to worsen.
Here's the map of flooding and the river systems. So all of these river systems associated with the Missouri River and anything that drains down from these areas that caught all the rain are going to be flooded out. River bottom ground, I mean, even if it's not, it's going to be really bad. There were millions of bushels of corn and soybeans lost over the weekend. There's no doubt about it. It's just a question of how do you quantify exactly what was lost. And this wasn't just over the weekend. Look at this map here. It's on screen. This is the last 7 days. There's a big area here that caught 8 to 9 inches of rain in total over a 7-day period. And this is not like, if you guys are outside of the United States, this is not an outskirt area. This is prime U.S. corn and soybean country. These are high yielding counties. So this is important stuff. The marketplace, corn and soybean futures exhibited no reaction to this last night. Corn futures opened up like unchanged. They traded lower within a minute. I mean, why isn't the market reacting to this? Because we very clearly lost bushels over the weekend. I wrote down a few things that I think are possible like reasons, and these are not my personal bearish arguments. But if you were a bear and you're not interested in this story, why don't you care? This is what I wrote down. The first one is that it's not that complicated. Rain makes grain. We've got a wet forecast. Yeah, there's going to be some losses here, absolutely. But in general, the crop overall is in good shape. That might be one bearish argument that could be made. You look at the crop ratings, they look good, right? Second one I wrote down is first notice day. First notice day is Friday, which means that if you're a farmer and you've got a March basis contract, you're going to be forced to price or roll that, did I say March? July basis contract. You're going to be forced to price or roll your July basis contract before probably by Thursday and in a lot of cases earlier. And those periods are very often associated with poor price action and markets that are under pressure because the market knows that there are bushels out there that need to be priced. The third thing I wrote down is the report. We've got a big report on Friday. We'll do a preview here in a second. Maybe the trade is convinced that acres are coming up, that stocks are going to be really healthy, and that we just don't have anything to worry about. Last thing I wrote down is demand. We'll get to export sales, but the book of new crop soybean export sales is the worst in 20 years. Corn export sales are below average and nothing to write home about. So, I mean, there's no doubt that bushels were lost. How do you quantify it? I don't know. Maybe this is one of these things that we find out about later in the year, exactly what was lost, but no reaction at all.
Weather models offer a healthy amount of rain for the U.S. Corn Belt. Rainfall over the next 5 days is likely to be scattered, while rains during the 5 to 10 day period may be more widespread. Above normal temperatures are likely to remain an issue during the next 2 weeks for much of U.S. corn and soybean country. Lack of adequate moisture appears to be a non-issue as the U.S. corn crop heads toward pollination.
Correct. Lack of adequate moisture is a non-issue. The issue, if there is an issue, is that there's too much moisture. And wet years and dry years are very, very different. A wet year, the crops can look really good from the road. That's what crop ratings are. It's a view at 70 miles an hour. But in a wet year, yield losses and poorer than expected yields can sometimes be seen later in the growing season. It could be August, September, October, till the market figures out in a wet year, if a wet year presents a big problem, that maybe the bushels aren't there. A dry year, it's much easier to see. Crops don't look good from the road. The crop ratings fall. It's much more of like an acute situation. It's easily recognized. Whereas in a wet year, it's difficult to recognize the problem. But, I mean, maybe I'm overcomplicating this. Maybe this is a wet forecast on June 24th. It's going to be wet going into the 4th of July. And that's bearish. That's the way the market reads it. The market's smarter than me. So that appears to be the deal right now. It's a wet forecast. Bushels were lost, but maybe it's not enough to just get anybody excited. I don't know.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Lots of good stuff last week. On Thursday, my friend Brett Peterson from North Dakota was on. He's a crop scout and agronomist. Gave us a crop update on the Dakotas and Minnesota, Red River Valley neighborhood. Talked about crop potential, some of the issues that they saw during the planting season, the prevent plant situation, that sort of thing. Brian was on Friday. We did a special Friday edition of Charts with Brian, and he had some absolutely fantastic stuff as it relates to the grain markets, also the livestock markets. Has been really good with some of his analysis as of late. In particular, Pete did our pre-open weather update last night. He's doing these on Sunday evenings. They go out at 6 p.m. Central Time, an hour before the markets open, and that's going to be must-watch stuff all summer long. If you guys want to see the premium stuff, go to standardgrain.com. Sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. I will forward you a copy of this morning's email, which includes our 6 most recent premium videos if you sign up this morning. Remember, guys, this is the best way to support the channel. The podcast pays us $0 to be exact, and YouTube pays us enough to keep the lights on. This is the only way we're able to do this every day. So check that deal out.
USDA will release its planted acreage and quarterly grain stocks report on Friday morning. Traders expect that planted U.S. corn acreage will rise modestly compared to March intentions. A modest rise is also expected in U.S. soybean acreage compared to March. June 1st stocks of corn, soybeans, and wheat are likely to be drastically higher compared to the same period last year.
I am convinced that the trade is convinced that corn acres are coming up. That's what I'm convinced of. I believe that people believe that the corn acreage number is coming up, that it's not going to be, I don't think the smart people actually believe that 90.3, that average trade guess. I think people are thinking 91, 92. That's what I think. I think that'd be the whispered number. Because if they actually believe this number, I feel like the market would maybe be reacting to some of this weather. The stocks are going to be sharply higher versus a year ago, the way that it looks. And you can see surprises in the stocks numbers too. This is a report that is associated with a lot of volatility historically. It's one of the biggest reports of the year. Of course, USDA and their infinite wisdom puts it out on a Friday morning at 11 a.m. Central. So we have 2 hours to trade it before we go home for the weekend, which is not the way that it should be. But we'll talk about this more as the week progresses here.
Russian farmers have reseeded crops affected by early May frosts. According to Russia's ag minister, the frost had little impact on grain production because most of the damaged acres were reseeded. The ministry has maintained its forecast of 132 million metric tons of total grain production this year, with wheat accounting for 86 million metric tons. Last week, after numerous cuts, Russian agricultural consultancy ICAR raised its wheat crop forecast by 500,000 metric tons to 82 million metric tons. USDA is estimating Russia's wheat crop at 83 million metric tons. Hot and dry conditions are forecast to impact crops in the southern part of Russia here through the end of June.
Most of Russia's wheat crop is a winter wheat crop, so they couldn't replant that. But I think the 20-something% that is a spring wheat crop was able to be replanted. This may be a situation where USDA and also the private entities, maybe they went too low too fast with these estimates. I mean, you guys have seen what the market's done. It's absolutely fallen on its ass. So does the trade believe that the Russian wheat crop is going to be 80 or sub 80? No, I don't think so. I think it believes that it's probably mid to low 80s and that we haven't really seen a big increase in demand or panic or anything like that. So the market is just really falling apart here. Not a good action.
U.S. corn export sales were soft last week. Net corn sales fell below pre-report expectations at 20 million bushels. The print was down 52% from the previous week and down 48% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales were reported at 20 million bushels, up 48% from the previous week and up 89% from the prior 4-week average. China was the largest buyer for the week. During the second week of the 24-25 marketing year, net wheat sales surpassed pre-report expectations at 22 million bushels. South Korea was the largest wheat buyer for the week.
Not really anything to write home about here. China did buy some and has been buying some old crop U.S. soybeans here and there to fill some gaps, I guess. But make no mistake, the export situation as it relates to soybeans is very bad. The new crop book of sales, again, is the worst in 20 years. China still has not bought one single cargo of U.S. corn or soybeans for new crop delivery. And I think that that's a cause for concern, especially as it relates to soybeans, given that exports are a bigger piece of the demand puzzle than they are in corn. But nothing good here for new crop. Old crop stuff is fine. I don't think USDA is going to have to make a ton of adjustments anywhere.
Home prices set a new record high in May. Last month, the national median existing home price rose to $419,300, up 5.8% compared to May of last year. Before the COVID pandemic in February 2020, the median price of an existing home was $270,400. At that time, the average mortgage rate was 3.89%. Last week, the average rate on a 30-year fixed rate mortgage was 6.87%. Surging prices coupled with high interest rates have caused home sales to tumble. Year over year, existing home sales in May fell 2.8%.
When you throw there's a different statistic that includes like the new builds and stuff, and we've actually come off the highs just a little bit. But this is pretty crazy. I mean, so home prices since your last pre-COVID month, which was February of 2020, are up 55% in that, 4-year period, whatever it is, which is absolute insanity. This is the result of a couple of things. I mean, the first one is money printing, and I went on my money printing easy money rant last week. The second one is that we're undersupplied when it comes to housing in the United States. And a lot of that still dates back to 2008, 2009, 2010, where people just stopped building for 3 years, and we've never really caught up. So it's pretty crazy that the market's been able to hold up the way that it has, despite the drastically higher interest rates. What's this thing going to do if they cut rates later this year? I don't know. Does it mean it goes higher? I'm not really sure about that.
We had a cattle on feed report released on Friday. Cattle on feed as of June 1st were reported at 100% of year-ago levels, slightly higher than the pre-report trade estimate of 98.9%. Placements in May were reported at 104.3% of year-ago levels, higher than the pre-report trade estimate of 98.3%. Marketings last month were up marginally versus last year, which was in line with expectations. The report is considered slightly bearish to neutral due that placements, they came in just a little bit higher than expected.
Yeah, I say it every month, and it's true every month. The trade always gets placements wrong.
Right.
And the fact that they miss placements by 6%, I don't think necessarily means that we have to be lower or sharply lower. The cattle on feed number, which was slightly higher than expected, I guess is maybe the more relevant item. So I'll see how they open today. Outside markets on Monday to start the week, nothing overly exciting. U.S. dollars about flat. Stocks are marginally higher. Bonds are flat. Crude oil's up 18 cents at 80.91 in the August WTI. Have a great day, guys. We'll talk to you on Tuesday.